Press go.
Hey everybody, Economic Ninja here. I hope you are doing great. The lady standing next to me is a Maven. Yes, that is correct. I am a ninja, she is a Maven. So we are like...
Superheroes!
That's exactly, economic superheroes. I'm not a financial advisor or a financial professional. Are you an advisor or a professional?
I am not. I write about what I'm doing with my money, and I am not an advisor.
I love that. So we had to give that disclaimer because you know all the people that went to school for all this super stuff and have name badges, those are the people you should listen to.
Yes.
Yeah, not us, okay? So let's just get that right out in the open.
Out in the open.
So the reason why I wanted to bring, so her name is actually Gwyneth Preston. I don't have my cardboard notes with me, but she is the resource maven. And the reason why I wanted to meet you is because a couple of colleagues of mine yesterday were watching you speak at an event. They said, we wanted to see you speak, and they didn't want to miss it, so that perked my ears up. And then I was talking with Daniel, and he says, you have to interview Gwen. So we started chatting just before this interview, and I said, hey, I don't do notes, I don't do anything, no editing, we're gonna go right into this. You're a newsletter writer, and you talk about resources, but you were, before this, wanting to talk about big tech, where I thought the markets were going, so you're way outside of also resources, because resource stocks, commodities are completely affected by markets.
Yes.
So what do you think right now is, well, let's get a little bit of your history. I mean, you've been doing this for quite some time, so let's talk about that.
Sure, yeah. So I started my newsletter about 8 years ago in 2014, and that's when mining markets were just cratered, right? They had gone from 2012 to 2014, 2015. It was terrible out there in the mining space. And so
Perfect time to start a newsletter, by the way.
Well, it is. Yeah. It's a tough time to convince yourself to leave your salaried, pension benefited job and start your own business at the bottom of a bear market.
Yeah.
But that's what I did. Before that, I had spent 7 years in the space. 5 of those I was a journalist, and I was writing for a newspaper that was all about global mineral exploration and development.
Wow.
So I got to learn about the space from that objective perspective. I couldn't own stocks. I was just traveling the world, meeting people, understanding geology, understanding how these things happen.
Yeah.
And then in the middle of that journalism stint, I spent 2 years away as a ghostwriter for a newsletter.
Nice.
And at the time, he was covering energy stocks, so I learned about fracking, and he was really into uranium and lots of things. So I got a view on the newsletter world. Granted, he was writing for a huge newsletter empire, and so I went a different route, and when it was time for me to go out on my own, I started my own independent.
But you were writing about things like uranium way before the boom.
Yes.
Pretty exciting, because people that bought uranium stocks are like super excited right now. They're driving Lambos and Ferraris. Probably not, actually. They're very smart people that
They probably still have their money in uranium, actually.
Exactly. It's people that see the trends ahead, and that's what I try and do on this channel, is really show people the trends ahead. The stuff that people like crap on and they don't like, that's where I get excited about, because I want to sell that investment to everybody at the top when the sheep finally rush in.
Yes.
So let's talk about sheep rushing in, because you were talking about beforehand, you're like, hey, what's your take on the federal, the interest rates today the Fed's going to come out with, and we're probably not going to have this video out in time, but they're probably going to raise
50 points
50 basis
at 11
points.
a.m. today.
Yeah, they got to feel like super, like, hey, we are doing something. We are getting on top of inflation. It is our number one thing. I love it when Jerome comes out and goes, that is like my number one priority. And I go, well, then why don't you raise rates today?
I know,
you could actually do that, but they don't really want to, do they?
Well, the funny thing is, across the market, there's been a huge, oh my gosh, inflation is the thing, we really need to talk about inflation, but there's been a real hesitation from traders, from central banks, to actually do anything about it. And I think, they believed in inflation, but they didn't actually want to pull their heads out of the sand and do anything about it.
Yeah.
I remember looking at an IMF report a couple days ago. They're like, we think inflation is a real and persistent concern. And then they gave their inflation forecast. Yeah. And for this year, it was like 5%. I'm like, it's got to crash to average 5% in 2022, given where it is. And then in 2023, it was like 2%. I'm like, so which is it? You actually don't believe inflation is persistent. You just say it.
Well, what's really cool is they're always wrong. That's what I love. Like, that is like the theme right now. You're like, I'm a financial professional, it's going to do this. And they go, well, it actually went and did that. Like, what?
It's uncharted waters.
It's happening like super fast.
Yeah.
So you must be thrilled being a newsletter writer, because you have no lack of available content right now.
There's so much to talk about. If anything, my newsletter gets too long every week. And yet there's things that I don't cover, because to invest in the metals space, like you said, you have to understand the macro outlook, the macro setting, right? And because especially the base metals, they are driven by growth. And so nobody's going to buy copper and copper stocks unless they think that growth is coming. And so gold is a different beast. People buy gold for different reasons. So you have to understand if those reasons are in play. So I spend a lot of time talking about the big macro picture and making fun of people who say that they believe in inflation but don't actually do anything about it.
I love making fun of people.
And then talk about what stocks I'm buying.
Old Jerome, just like, I promise, I'm gonna do it. I'm gonna do it. Nobody's not gonna do it. So let's talk about growth. And right now, the big thing isn't resources, it's not precious metals, it's tech. Like NASDAQ's fallen off a cliff. Right as we were about to start this interview, she was talking about the NASDAQ falling down. Look at all of what's going on. We're going to hit on Apple. But then I said, well, did you hear about Lyft? You know, she goes, what are you talking about? I'm like, Lyft's earnings came out horrible, abysmal. And their stock's down like 30% at one point today, which is, but I get just like super pumped.
You love it.
Yeah, because what happens is that's a growth story that everybody dove into, technology, because of the shutdown. So let's talk about that. You were talking about that earlier.
Yeah, for sure. And I mean, the shutdown, I think, created two reasons for growth across the stock market and in particular sectors as well. Obviously, there was call it the Robin Hood phenomenon. Lots of people were given money and then were stuck at home. And so they got into trading. We know that story well. That definitely pumped a lot of money into the stock market. That was a huge part of the reason that we had such a post-COVID crash recovery and that we got to such highs. But then there was also big tech has for years now led the stock market. And big tech, there were specific reasons for those companies to do well. Apple, the example I talked about, they grew at 3.3% year over year forever, from 2013 till 2019. And then in 2021, they grew 33% because everybody bought iPads, because everybody's kid and grandma needed a... You didn't?
I'm an Android guy. Let's just make this very clear. Apple people are weird. Don't just tell. I love it.
Let me just see what time it is.
Exactly. The comment section is just going to light up right now. I love my Apple.
But that is unsustainable. People now are loaded up with all their tech stuff. Netflix crashed because people are like, oh, I can go on trips again. I don't need to be at home watching TV. So the specific drivers of real growth in big tech have been, like, that growth was all pulled forward and now we're in a deficit. And so there's like real risk out there. That's why the NASDAQ is down 24% right now.
It's hard not to grin, guys. So wherever there's tragedy, there's obviously opportunity. That's how China believes and that's how I believe, right? And good investors, which are not speculators, believe the same thing. So one thing that I think is very interesting is so I was an investor in the dot-com stocks when the dot-com boom was happening. I started in 1998. I sold all of my dot-com stocks by the year 2000, actually before the crash, which was epic. I moved my retirement, new retirement. I'm not that old yet, but actually, I'm getting there. All right, so, but I moved it into bonds, and I got to enjoy that wave. Well, most people, something that people aren't talking about is the Robin Hood effect also. And I don't know if you can speak to that, but we saw massive amounts of people take those stimulus checks and dive into these new style of trading applications on their phones, where now we have people that, I remember when I had to get my options account, my margin account, it was a lot of work, you know, and I had to actually prove my net worth, my financial education, where now you can turn on application on your phone and you can trade, which is scary.
I mean, obviously it created huge lift. It amplified the gains over the last few years, but the knife cuts both ways. And I mean, it's very, it pains me to think about what some of those traders are experiencing. That said, we all experience it, right? Like, I'm in mining. We are defined by like bull markets that are phenomenal and then bear markets that are absolutely terrible and erase value.
And the bears jump right out of windows. I mean, the bear markets happen so fast, or a bull market's steady. Let's dive into that. So let's close on this. And this is the most important part. If you guys have made it this far, do me a favor, hashtag gold, hashtag silver in the comment section below. This is the most important part that most people don't believe or understand, because I'm taking small positions in multiple mining companies, both juniors and exploration companies. But I want people to understand this. Paper, gold, and silver do sell off into stock market crashes. And let's use 08 as an example, okay? So first off, I want to say paper, gold, and silver bottomed well before the stock market did. They bottomed the end of 2008, stocks bottomed in 2009. They started an epic climb, and we saw mining stocks go up 3, 4, sometimes 10 times their values over the next few years, going into what? 2012,
2011 was
that was
sort of
the prime
peak.
numbers. That's when we started seeing the mint run out of some silver, issues with supply and physical. I believe this to be much bigger because the world is freaking out. We have supply chain crisis and we have geopolitical threats now that are unparalleled. I don't think we've seen this in the last 100 years, quite frankly.
It's pretty intense.
So if you were getting into, let's talk about the psychology of buying these stocks. That's really important.
Yes.
How do you take it? Because as paper, gold, and silver sell off, you can have an amazing discovery, but it doesn't matter because your shares are priced based off of what's going on in the market.
Yeah.
So how do you look at that as opportunities and how do you deal with it?
So I think you have to decide what your sort of time frame is off the bat. If you're a day trader, a short-term trader, then you have to focus on the gold price. You have to understand that right now, as this rate hike cycle gets underway, there's going to be a lot of volatility. I think it's a tough time to know what's going to happen and to make money in the commodity space. The growth argument for the base metals and the monetary uncertainty argument for the precious metals, those are tough right now.
Yeah.
So short-term traders, I'm not going to tell you what to do or how to position.
Totally.
As long as you've got a medium-term horizon, a year to 3-year horizon, I think that now is an incredible time because on the base metal side, the growth side, the green energy revolution, the greening of how we operate in the world, it's undeniable, and it is a paradigm shift for metals demand. Like we've gone through a bear market. There hasn't been enough capital investment, meaning building of new mines. We don't have enough nickel. We don't have enough copper. We don't have enough uranium. And those demands are being amplified by this green revolution. So the picture there is very strong. And then on the gold side, I think you're right. Everything that we talk about to do with money printing and what the Fed's going to do and inflation and the need to hedge all of that. And then the Robinhood stuff, the fact that the stock market is likely to crash. What happens in a stock market crash? People dive back in, but they dive into value, not growth. And gold miners and miners in general are value stories. So they just fit a lot. Yes, there's going to be a crash. Yes, mining will get sold off within the crash. That's why the short term doesn't work. But average cost in, think about what you'll do if you save some money to add if there's a crash, when there's a crash, and have a longer term horizon because gold will V out of any bottom. It will just boing. Look back at the COVID crash. The V was so sharp you would cut yourself just looking at the chart.
Well, and to watch how fast physical dried up, like overnight,
oh my gosh.
Premiums exploded. And I was like, people have no concept. They really think that these online brokerages or sellers of physical are just making more money on them, and they have no idea. They're buying it at way over spot.
Yeah, for sure, which is crazy.
We've never seen, actually, for this long of a term.
And so I think the gold argument is very, very strong. Everything to do with, whatever, the US dollar. And then I think even base metals will U out of a bottom. It won't be as sharp as gold, but they will U out of a bottom because that fundamental argument is so strong and the green energy revolution is such a big one. So I think you just got to figure out, don't worry about the day-to-day. It's crazy out there right now. But have a medium-term horizon, and I think the opportunity is really epic.
I think that's huge. Get to know the teams. Get your picks now because nothing's going to change as the paper sells off, the shares sell off, except for, hey, I know the team, I know the project. I've watched multiple drilling results or these companies build into juniors and possibly majors, and then pounce when those prices are down.
Exactly.
And so as we close, two things. I want people to find out how to find you, and then also what is your number one favorite pick. Let's put it this way. What's your there could be broken down to two stories because everyone knows I'm a big silver bug, right? Because that's the most hated. I love silver, but we're also talking about base metals. So where do you think the most value is in the commodity sector right now? And then what's your what your best pick, or just go for it. So where can we find you? And then let's talk about that.
So my website is resourcemaven.ca. That's where I publish my newsletter. There's a free trial there. So resourcemaven.ca.
Like Maven. I don't know why. It's like it's like just a bird costume.
I'm just like a ninja crow, outfit. Actually.
A crow.
I don't know.
I think they're like the smartest birds.
They're pretty smart.
Yeah, very smart.
Okay, then on the pick side, if you want my highest conviction, sort of splashiest, I would go with uranium. I think the uranium sector is just, everything is lined up. We could have talked about uranium on its own for this whole conversation. There's so much to say. And so getting a stock that has good leverage to uranium, it will be volatile, but when uranium goes, there are so few stocks, there's so few ways for investors to get exposure to uranium that they just cram in, and it's like they can't shove money at these stocks fast enough. And so something like Uranium Energy is a good pick. ISO Energy. These are the kinds of stocks that have incredible leverage to uranium, and I really think uranium's going to go crazy. I could also give picks in silver, copper, and gold, but I don't know if I want to.
I need to start covering more uranium companies. You're right, because the growth story is huge, because people are waking up to green energy and they are figuring out that nuclear is the greenest. Yeah, it is unbelievable. So for sustainability, and right now, Elon Musk is in there. No!
And as Europe tries to diversify away from Russian energy as well, Europe was trying to go away from nuclear, and then they're like, oh wait, we can't. If we're not going to get Russian,
if I shut this thing down,
we're going to need that
Russia,
nuclear.
we don't want your oil. Oh, John, did you hear that? Like, all right, well, thank you so much. Now I know what I'm going to talk to Rick Rule about. I'm going to have to dive more into uranium, because Rick loves uranium.
For sure, absolutely.
And he's amazing. So, all right, guys, well, thank you so much for coming on.
Thanks for having me. This was great.
All right, well, hey, guys, with that being said, the Economy Ninja and the Maven are out. Oh, and I don't edit, so I'm going to push the button, guys.